Hello and welcome to the January edition of the Corporate ESG 5 and 5 podcast, the podcast in which we spend 5 minutes exploring key ESG trends set to shape the market this month. I'm Kirsty Stevenson from the ESG advisory team here at NatWest, and in this month's episode, I'll unpack recent developments emerging in ESG reporting and disclosure obligations. Firstly, we'll start with the EU, where the focus for 2025 was established back in November by Ursula von der Leyen, President of the European Commission, calling for a potential for an omnibus initiative to simplify EU taxonomy, the Corporate Sustainability Reporting Directive, CSRD, and the Corporate Sustainability Due Diligence Directive, CSDDD. An omnibus regulation would combine amendments to these regulatory areas in one legal act. The main aim behind the omnibus will be to create a Commission's target to cut corporate reporting burdens by 25% by mid-2025. The planned omnibus simplification package is scheduled to be delivered by the Commission's President on the 26th of February. Given that many member states have transposed the CSRD into national law following the deadline for transposition on 6th of July last year, we expect the Commission to move quickly and decisively to minimise uncertainty for entities in scope for the CSRD. In the meantime, as reporting under the taxonomy regulation and Wave 1 of CSRD reporting continues to push ahead, businesses should build in flexibility to remain adaptable to evolving requirements. For small and medium-sized enterprises, the SMEs within the EU, the European Financial Reporting Advisory Group has introduced the Voluntary Sustainability Reporting Standard, VSME, for non-listed SMEs. It aims to streamline sustainability reporting by providing a unified framework, thereby reducing the burden of multiple, uncoordinated ESG data requests from various stakeholders. The European Financial Reporting Advisory Group plans to support the adoption by offering digital tools, education materials, and outreach initiatives in 2025. It is worth noting that this was published in December and available on the EFRAG website. Taking a look now at the UK, the UK Sustainability Disclosure Technical Advisory Committee has endorsed the IFRS Foundation's International Sustainability Standards Board reporting standards, the IFRS S1 and S2 for companies in the UK. The committee recommends extending climate-first reporting relief from 1 to 2 years to allow time to clarify how entities can align the standard with existing sustainability-related disclosure requirements. This endorsement aligns with the UK government's green finance strategy, signalling a commitment to enhancing sustainability reporting and positioning the UK as a leader in this area. Looking across the pond in regards to sustainability reporting in the US, the climate disclosure rule, adopted by the Securities and Exchange Commission in March last year and subsequently stalled due to ongoing litigation, is now expected to be withdrawn under the new administration. However, the lack of federal support for climate disclosures is likely to be offset by state-level initiatives. For instance, California's Climate Corporate Disclosure Accountability Act has been signed into law and is fully funded, with additional resources allocated for its legal defence. Furthermore, we expect voluntary uptake for the IFRS standards to increase in the US as investor support for the framework is very strong. In summary, the development of ESG and sustainability landscape continues to evolve at a rapid pace. 2025 looks to be a pivotal year, with new reporting requirements, harmonisation of standards, and increased accountability reshaping the ESG landscape. Given the implementation and potential amendment of ESG-related reporting regulations, companies, investors, and asset holders will need to remain agile and informed to adequately respond to these updates. Thanks for listening to this month's Corporate ESG 5 and 5. I hope you find it useful. As always, please be sure to check out our monthly newsletter, LinkedIn, for more on key ESG trends shaping the market this month. And if you like this episode, please follow the channel and click the notification bell so you can get future episodes as soon as they are released. Thanks again and see you next time.